The last opportunity to get rich has finally arrived. There's no time left now. You'll realize that everyone with even a little money in the world is racing against the clock to restructure their assets. This time, it's highly likely to be the most devastating financial crisis in history. Those who don't follow financial news might not know yet. But the stocks that surged last year where you could just close your eyes and buy to make huge profits have now started plummeting. For example, the leading stock NVDA has dropped 28%, while Tesla, which soared last October thanks to Trump's policies, has reversed and fallen 46%. Giants like Amazon, Facebook, Google, any company you can name, have declined by at least 15% or more. This drop has left countless investors in a state of panic and doubt. But what if this is just the beginning? What if the market continues to spiral downward? In just one night, a wave of leveraged investors could lose everything. They'd be forced to sell off assets to cut losses, triggering a global asset collapse. By then, it won't just be a dip, it'll be a full-blown crash. This has happened before, in 2000, 2008, and 2020. And now, it's about to happen again. However, the scariest part isn't the market crashing, it's that this is exactly what the US government wants to happen. Why? Because only when the economy collapses will the whole world have to pay the price for America. Greetings, ladies and gentlemen. Have you noticed that the Atlanta Federal Reserve, a branch of the Fed, once predicted that US GDP in the first quarter would grow by 2.3%. But by the end of last month, they revised that figure from a positive 2.3% to a negative 1.5%. What does this mean? It means they're openly admitting that the US has entered a recession. Just a few days later, the data was adjusted again, this time dropping to minus 2.8%. What does this mean? It means the US isn't just in a recession. It's far worse than initially predicted. So if Trump gets elected and the stock market surges, will it crash uncontrollably after he takes office? Declaring a national recession is an extremely sensitive matter in many places. But even the US government has openly acknowledged it. A ton of official economic data is telling us things are getting worse. Lately, I feel like those old folks from decades ago, glued to the TV, watching stock market news, tracking Trump's every move to see what he'll do with the market. Do you remember, 4 or 5 years ago, a single tweet from Trump could instantly sway the market? Back then, he constantly pushed the Fed to print money to stimulate the economy, causing the market to skyrocket. But this time, he hasn't said a word about the stock market. Why? Just as I was about to turn off the TV, the US Treasury Secretary appeared and announced that the government's main goal right now is to keep long-term Treasury bond yields from rising too high. In simple terms, they want to ensure US bonds can still be sold. What does this mean? Look at this chart. Shows how much money the US Federal Reserve has left in its wallet. You can see that since 2022, their funds have been steadily shrinking. So what will they do? The answer is, they'll borrow money from the rich. The FED will use US Treasury bonds as collateral, asking financial institutions and big players to lend them money. This is called a reverse repo, reverse repurchase agreement. Simply put, it's the Fed borrowing from its own financial system. Look at this chart. The higher the blue line, the more bonds the Fed has to pledge to borrow money. In other words, the FED's borrowing capacity is being pushed to its limit. But the opposite is happening. The blue line will drop to 0 this month. That means even the Federal Reserve can't borrow from its own financial institutions anymore. There are only two possibilities. First, the financial institutions genuinely have no money left. If they don't have money, how can they lend to the Fed? Second, even if they do have money, they'd rather hold on to cash than take the Treasury bonds the Fed is offering as collateral. So, who will buy US Treasury bonds now? Right now, the Fed's wallet is nearly empty, and they can't borrow. Major investors and financial institutions either don't have money, or, if they do, don't want to buy US Treasuries. Meanwhile, countries like China, Japan, the UK, and others have been dumping US bonds in recent years. This means US bonds are facing a liquidity crisis. In other words, they're no longer circulating normally in the market. Why? Because more and more people want to sell, while fewer and fewer want to buy. That's why Trump's financial chief said their most critical task is ensuring long-term U.S. Treasury bonds can still be sold. The solution is simple. Make America great again. For example, the government will cut jobs and big corporations will lay off workers to raise unemployment rates. Then they'll hike tariffs to create higher inflation in the U.S. Most importantly, they'll impose sanctions on the world, even deliberately, triggering a financial crisis or economic recession. First, they have to destroy, then rebuild. That's how they make America great again. But for us, this isn't the time to waste a good crisis. When most countries can't escape this downward spiral, money will flow to safe havens, the assets we've prepared in advance. This is the chance not only to protect our wealth, but also to create a new generation of rich people. If you don't want to be a victim of this crisis and even want to rise to a higher economic class, follow my channel. I'll keep providing you with critical information. And if you're worried you'll forget what you just heard, hit the like button. This video will automatically save to your playlist, so you can re-watch it anytime. Now, the question is, why are US bonds running out of liquidity? Can't America just use its own money to pay off its debts? The answer is simple. The US dollar can't be recalled. What does that mean? Listen closely. US Treasury bonds are essentially a cycle of borrowing, spending, and repaying. For example, in the past, the Fed could print $5 trillion, then use that money to buy US Treasury bonds, lending it to the US government. The government would then owe the Fed $5 trillion. The government would take that money and buy goods from all over the world, importing everything. Once that $5 trillion is spent, the US government runs out of money. So what do they do next? This is where the capitalists came up with a plan. America spent $5 trillion. Globalists, if they can recover $4 trillion of it, only $1 trillion would remain, circulating worldwide, leaving the world short on cash. Then, other countries would have to keep selling goods to the US to earn dollars. At that point, the US could keep printing money to buy up everything the world produces, right? So how do they recover the money they've spread around the globe? Simple. They borrow it back. They sell us treasury bonds and say, lend money to the US government. When we make a profit, we'll pay you back with interest. This means countries sell goods to the US, earn money from the US, and then reinvest that money back into the US. Essentially, Americans are working to help them pay off their debts. As a result, the world uses part of its earnings to buy US Treasury bonds. The FED prints $5 trillion. The US government spends $5 trillion. Then by selling bonds, they recover $4 trillion. This prevents the world from being flooded with too many dollars, allowing the Fed to print another $5 trillion for the government to borrow. The government spends, again sells bonds to recover money, and prints more. Got it. In other words, US Treasury bonds are a mechanism for the US to reclaim money from the world. Their goal is to do nothing and still use printed money to buy all the goods the world produces. So whether the US government owes $36 trillion, $100 trillion, or even $1 quadrillion isn't the issue. As long as about 40% of that debt comes from other countries lending to the US, the system keeps running smoothly. In simple terms, as long as the US can recover the money it's spent, keeping the world short on dollars and dependent on dollars for trade, they can keep printing money without problems. In theory, if they keep recovering debt, US bonds might not even need to be repaid. The US could just take on new debt to pay off old debt. For example, if the US owes Japan $1 trillion and that debt is due, they'd ask Japan, "Want to lend to me again? I'll keep paying you interest." If Japan agrees, the US doesn't have to repay the principal. If Japan says no, the US borrows $1 trillion from the UK to pay Japan. And 30 years later, they figure out how to pay the UK. This is a strategy of trading time for space, or, bluntly, stalling. By dragging things out, the US can ease immediate repayment pressure. This isn't taught in textbooks, where people often think debt has to be paid off right away. In reality, debt can be delayed or even passed off to someone else to bear. But if the world sells goods to the US, earns dollars, and doesn't use that money to buy US Treasury bonds or lend to the US can't recover the money it spent. If they can't recover it, they can't keep printing money. Without printing money, they'd have to work and produce to earn money to pay off debts. This is the liquidity crisis facing US bonds. And that's the situation right now. In the past, 40% to 50% of US debt came from foreign lending, but not anymore. Now, only about 20% to 30% of US debt is from other countries. This means the money the US has spent isn't coming back. If the money doesn't return, the world isn't short on dollars anymore. If the US keeps expanding its balance sheet and printing more money at this point, the dollar would immediately plummet in value, making the world even less willing to use dollars or buy US bonds. That would make money even harder to recover. So what can they do? Some say Trump is working hard to find ways to raise money to pay off debts, like increasing import tariffs or even selling US citizenship for just $5 million. You can become a US citizen and immigrate in. International joke. As I said earlier, the US debt doesn't need to be repaid, and it can't be. If the US actually paid off its debt, the global financial system would collapse instantly. Why? Suppose Trump succeeds in pulling money back from the world into the US. But if he uses that money to pay off debt, it gets withdrawn from the system again. Plus, the biggest creditor of the US is the Federal Reserve itself. The Fed printed money and lent it to the government. If the government pays back that debt now, it's essentially destroying that money, making it disappear from the system. So, why does the US print money? Because earning it through labor is too hard. So they print money, sell bonds, recover money, and print more. If the US stops selling bonds and tries to pay off debt, they can't print more money. So the US doesn't need to pay off its debt. Why bother? If the US dares to reduce its debt, it'll destroy itself. If they recover $100 million and use it to pay off debt that didn't need to be paid, they'd run out of money. When the US has no money, it's not just the stock market crashing. Wall Street would shut down entirely due to a lack of liquidity. If no one has money, businesses have no customers to sell to, and the economy grinds to a halt. Then, the scenario many hope for might emerge. Homes in prime US locations could drop to $100 each due to deflation. But by then, most people's assets would also be worth just $1. And banks wouldn't have money to lend for home purchases. In other words, even if house prices crash, assets lose value, to most people would still find homes too expensive and unaffordable. So don't think the US paying off debt and causing deflation is a good thing. It'd just mean US assets are sold off cheaply, and Americans become poorer. Thus, understand this clearly. No US president dares to truly pay off the national debt. Paying off debt is just a slogan for TV audiences. The real mission of the US government is to find every way to regain control of money issuance, pull money back from the world, and keep printing, i.e., expand public debt. In other words, as US debt grows, the amount of money printed grows too, and the dollar keeps losing value. Pumping money into the market requires assets to absorb it otherwise. It leads to uncontrollable inflation, causing asset prices to soar. So what's the advantage of small retail investors over giants like Warren Buffett? Flexibility. Buffett might need a year to prepare to buy or sell assets, while we can wait for the moment when money flows in, pushes stock prices up, and then jump in not too late. In short, the big players set the trend, and we just follow it, make money, and get out. Now, listen carefully. If you don't grasp this part, you won't understand the critical points later. Right now, the US can't pull money back because the world has stopped lending to them. When money doesn't return, the US can't keep printing. So what do? Simple, something we've all experienced. Raise borrowing interest rates. If you lent me $1 million before, and I paid you $10,000 in interest, but you don't want to lend anymore. Now I'll offer $50,000 in interest to make it more appealing. That's how the US successfully sucked money back from the world. But the consequence? Most people only buy short-term US bonds. Nobody wants long-term ones. Plus, seeing the US market rise, many jump in to speculate, pushing prices even higher. If you want to understand more, rewatch my video from last Monday. Video we post is tightly connected. In short, the result is that the US has pulled dollars back from the world. But that money didn't go to the government, it flowed into the US stock market, into the hands of American capitalists. As I said earlier, the US uses government bonds to attract global money without repaying it immediately. They borrow for 30 years, using that money to pay off short-term debts, soon borrowing long-term to pay short-term. But now, short-term bonds still have buyers, while long-term bonds don't. No one's willing to lend to the US for 30 years anymore, meaning their model of borrowing long-term to pay short-term no longer works. When this mechanism collapses, the US will have to keep paying off short-term debts with high interest rates. For example, in 2025, the US has about $8 trillion in debt. Plus, they need to borrow another $2 trillion. But right now, the National Treasury only has about $600 billion. Not even enough for regular budget spending, let alone debt repayment. With no money to pay debts, the US could print more, but, as I mentioned, if they print before recovering all the money, the dollar's value would crash instantly, turning it into worthless paper. So, what will the US do? This is the crux. The US Treasury Secretary declared that their top priority is selling long-term bonds. What does this mean? When I talked about this before, many laughed at me, saying I was spreading fear. But now, Wall Street experts are saying exactly what I predicted. Us traders are now preparing for a stock market crash to shift money into long-term bonds. Why? Because if the US wants to keep printing money without actually repaying debt, there's only one way. Force money from the US stock market into long-term bonds. How do they do that? AFED branch recently announced that US GDP will grow negatively, and recent US economic data shows the economy has entered a recession. Why? For example, if you're doing business in the US, after Trump imposes tariffs, your import costs skyrocket. You'd have to raise product prices, making them unaffordable for many Americans. Goods pile up, and your business risks bankruptcy. If you survive that, congrats, but then Trump deports illegal immigrants, and you lose cheap labor. You'd have to hire American workers, ballooning your wage costs. If you still hang on because you're working with the government, thinking government contracts are secure, bad news. Trump also plans to cut $1 trillion in government spending. You'd collapse and look for public sector jobs. But just as you settle into a golden rice bowl, Trump announces layoffs of hundreds of thousands of public servants to save costs. You turn to big corporations like Amazon or Facebook for jobs, but they're all slashing staff too. The result, even society's elite are jobless in droves. What about your mortgage or car loan? With no income after losing your job, how do you pay? Us. Credit card defaults have now spiked to 2008 financial crisis levels. See, Trump. Chance make America great again. But everything he's doing is pushing the US into recession. Why? Simple. The US manipulates recession narratives, constantly claiming the economy's about to tank, sending a message that even the world's strongest economy is faltering. That means no investment is truly valuable anymore. Wherever you invest, you'll lose. In this high-risk environment, US government bonds offer high, stable interest rates, so you should quickly move your money into US bonds. But long-term ones. Right now, interest rates are 4% to 5%. If you buy now, you can lock in that rate for 30 years. If you don't buy, and everyone rushes in, rates will drop, bond prices will rise, and you'll pay more to own them later. That's why many are racing to grab long-term US bonds.